In reality, losses are a big part of trading, but ultimately we can avoid many of the unnecessary losses that we take in our trading just by following our own trading rules. Today I broke my trading rules, and that of course resulted in a loss. So I'm going to break down this losing trade for you so that hopefully you can learn from my mistakes and you can avoid taking some unnecessary losses in your own trading. So we can see that this was a loss of $465. Obviously, this is not the end of the world. I'm a full-time trader, so I should be able to bounce back from this pretty quickly, but at the end of the day, it's still frustrating to take a loss that was, in my opinion, completely unnecessary and could have been very easily avoided. And ultimately, I could have been green and profitable at the end of the day if I wouldn't have taken this unnecessary loss. So this trade in the stock ELAB, this was a stock that was gapping up in the pre-market session, showing a lot of strength in pre-market into the open. We can see higher highs and higher lows climbing around the VWAP. And this is kind of exactly what I want to see on the shorter term time frame, at least, for a potential gap and go once the market opens. Now, because of that, since this was a great gap and go candidate for the morning, this was listed in our opening range breakout alerts channel with an opening range breakout level of $4.80. And we can see that pretty much right away once that opening range breakout level was formed. Our opening range breakout bot notified us that ELAB was moving above that 480 level. So we of course got that 480 level by taking the high of that first 5-minute candle once the market opened. We see the low down there was $4.37. So typically when you're trading an opening range breakout, you want to look for a breakout above that candle's high, and you want to use the low then as your risk level to cut losses if the trade happens to fail. So I'm going to move down to a lower time frame here just to kind of explain to you why I was buying this when I was and where I went wrong with this trade. So pretty much right away, this started to move above that opening range breakout level. And if I would have been immediately buying into this, there would have been some nice room to actually secure some profits before it started to dump back down. But ultimately, I was a little bit late to the trade. It started spiking through that $5 area. We can see looking at the pre-market highs. The pre-market high up here was $5.06 to be exact. We started to clear above that once the opening range breakout did happen. And I started to get a little bit of FOMO. I started to think that I was going to miss out on this trade. And ultimately, I ended up taking a pretty bad trade. I chased this stock at a price of about $5.11, I believe, even though the opening range breakout level was all the way down here at $4.80. And typically what I would want to see is, this stock pull back and form some support around that opening range breakout level to then buy into it for a continuation higher if I missed that initial opening range breakout entry, like I did. But unfortunately, I am human, so I didn't want to see this run higher without me. I started to buy into it using my hotkeys. I took two 500 share entries, again with an average cost of about $5.11. It went very briefly in my favor. I could have secured some profits up here in the 530s and 540s, but ultimately it was very short-lived. Started dumping back down, actually went into a volatility halt down here at a price of $4.66. And sure enough, when trading resumed, I ended up just dropping out of the position, selling my shares and locking in that $465 loss. So I want to take a quick look at the daily chart to show you why I think that this was an unnecessary loss and a loss that could have very easily been avoided. This is a concept that I talked about a few times here on this channel, and that is just focusing on the daily chart to determine what a stock is likely to do today. We see that history a lot of times in the market does repeat itself. So if a stock like ELAB is gapping up like we had today, and we see that historically speaking, every other time in the past 6 months, the past year, whatever it may be, that a gap up comes right back down, then we can assume that most likely today, the exact same thing is going to happen. And we see that this happens, back here in August. We see a few months later, the same thing happens. We have a big sell-off into the beginning of this year. We see another gap up that comes right back down, another one coming right back down. We have a big move that happened a couple of weeks ago, but again, it came right back down. So we have to know that, this is a stock that not only is failing to hold on to its gains, but there's also going to be a ton of bag holders in this stock that are going to be looking for the spikes and looking for the gap ups to sell out of their positions that they've been holding on to at a reasonable loss or even at potentially break even or a small profit. So because of that, if I would have taken a closer look at the daily chart here for ELAB, I most likely would have assumed that this gap up was not going to hold on to its gains, and I would have most likely not chased this into that breakout that happened over the pre-market highs and over the opening range breakout level. So that was mistake number one. The other mistake that I want to talk about is the idea of using hotkeys to get into a trade. Like I mentioned, I was buying this just over the $5 level, and I bought this in two separate orders of 500 shares for a total of 1,000 shares. And I did that using hotkeys. Hotkeys allow you to just click some buttons on your keyboard and immediately get into a trade without having to actually go through the order entry process. And this can allow you to, of course, get in very quickly to trades. And I found that when I'm using hotkeys to enter into a trade, I'm usually entering based more off of emotion, like fear of missing out, greed, whatever it may be, really, to get into this trade immediately, rather than actual strategy and rather than an actual plan and actual process. In my opinion, 9 times out of 10, you're probably better waiting for an entry that you can get in with a regular order rather than using hotkeys to get in right away. Now, I do use hotkeys to sell very often, but that is a completely different situation. I actually would have liked to have used my hotkeys to sell as this was spiking up in the 530s and 540s to very quickly be able to secure some profits into this trade before it turned against me. So ultimately, those were my lessons from today's loss. I hope that you guys found some value in it. I want to give a quick shout out to AUS888 here in the Market Master group. He was able to actually secure a profit from this ELAB opening range breakout. So kudos to you. It's great to see our traders, getting into these breakouts very quickly and being able to secure profits even when I'm failing to do so myself sometimes. That being said, I hope you found some value in this video, and if you did, please make sure to give it a like and subscribe to the channel. And if you want to come trade with us in real time, get access to our opening range breakout alerts, our group chat, our live scanners, and even access to our day trade bootcamp premium training, all of that can be found at Master the Market. There will be a link down below in the description for you to get signed up. Thanks again for watching. I hope you enjoyed, and good luck with your trading.